Good morning. This is Bloomberg Daybreak Europe. I'm Joumanna Bercetche, and these are the stories that set your agenda. Nvidia becomes the world's most valuable company as tech drives a global rally in stocks. Fed officials again urge patience on rate cuts. North Korea's Kim Jong-Un rolls out the red carpet for Russian President Vladimir Putin as the two leaders begin talks in Pyongyang. Plus, the UK's second richest person, Jim Ratcliffe, tells Bloomberg Britain has had enough of Prime Minister Rishi Sunak and his ruling Conservatives. More from our exclusive interview this hour. All right, good morning, everybody. Let's get you caught up on how some of these key markets are faring. Another very strong session for U.S. equities yesterday with the S&P inching towards another record high, the 31st record high of the year. And today you can see that we're leaning sideways, but still, crucially, the futures are through 5,500. We did have some slightly weaker than expected retail sales numbers come through. But what that meant is that investors used that as an opportunity to price in more rate cuts out of the Fed this year. We're now sitting at around 46 basis points of cuts priced in. That has been positive for risky assets all around NASDAQ. And you can see, again, pointing towards another positive session led by one stock in focus, and that is Nvidia, broken through Microsoft to become the most valuable company in the world. Euro stocks, you can see towards the open, pointing towards an unchanged open, and then FTSE 100 leaning slightly more negative. But in terms of some of the other assets that we're watching out for this morning, the dollar DXY is in focus. So we are moving towards the highs of the year. So the dollar continues to benefit from being a safe haven currency and the fact that the Fed speak as of late has been slightly more hawkish, despite the fact that investors are pricing in 2 rate cuts for the rest of this year. That's giving the dollar a bit of a bid versus other currencies. The pound also in focus. We're trading at around 127, so sideways, but we've got a key CPI print coming up later today. So that is at the top of the next hour, and something to watch out for, especially that services inflation figure as we head into the Bank of England meeting this Thursday. Will they sound more hawkish, and will they have to acknowledge the fact that those numbers have been surprising to the upside? What does that mean for the path of monetary policy? So crucial day for the UK coming up. Gold also in focus. It is slipping somewhat, down about 0.1%, but broadly speaking, we have seen a bit of a rally return back into the bullion. It is up 13% this year, as again, it's taking their cue from what risky assets are doing and interest rate markets pricing in those 2 interest rate cuts. And then finally, Brent above $85 this morning, so have completely shaken off that post-OPEC disappointment sell-off that we saw after the OPEC Plus announcements. And now we have fully recuperated those losses back to levels not seen since April. And for now, let's also check in on how Asian markets are faring with Avril Hong in the Singapore studio. Avril, what have you been watching this morning?
Yeah, we've been watching those tech names in the Asia Pacific after Nvidia's record-setting performance and how it crossed the market cap of Microsoft and Apple overnight. So that's really lifting the mood among the AI and the chip-related stocks this part of the world. It's helping the Kospi and the TAIEX to outperform. Even the Hang Seng is getting some fuel from the tech names, and this is an index that's been trailing, really struggling of late. We are keeping a really close watch as well on a Shanghai forum amid some expectations of potentially announcements of policy support. The Hang Seng has been outperforming compared to what you're seeing on the mainland clearly. But let's flip the board, because so far out of that forum, what we have gotten is comments from the PBOC Governor Pang Gong-sheng, and he says that they are studying the implementation of government bond trading. This would be buying and selling of government bonds. He says this is not quantitative easing. He's rejected that notion. Indeed, the likes of Mizuho says that the PBOC is not considering QE. This is more about addressing, replenishing liquidity, and we've seen the yields in China fluctuating amid that comment from the governor. But for context, we've been really seeing a bond rally in China because of safe haven demand and expectations of rate cuts. Let's flip the board, because the central bank that's already been a really keen participant in bond markets is the BOJ. Today we got the meeting meeting minutes from April, but investors seem to be shrugging that off a bit because the focus is really what we've gotten from the May meeting and what it's going to do, or June meeting, I should say, and what it's going to do in July. We are also keeping a close watch on the CPI numbers that are due at the end of the week. In the meantime, we have Japan reportedly considering issuing shorter-term maturities of bonds, something else to consider for bond market participants. So we're seeing the Japanese yen against the greenback not moving very much. Today, it's still quite weak levels, although the equities, worth noting, has pared much of the gains from earlier in the session. Nikkei actually negative now. Joumanna.
Avril, thank you so much for that overview. That was Avril Hong in Singapore. Boston Fed President Susan Collins says she can see a scenario for 2 rate cuts before the end of the year if there is continued good news on inflation.
We have to let the data tell us, and it's not 1 or 2 indicators. It's looking more holistically at the information.
Are you looking at 1 or 2 rate cuts at this point, given where things are?
I could imagine scenarios that would be consistent with both.
And Nvidia has become the world's most valuable company, overtaking Microsoft and Apple with a market cap of $3.3 trillion. So to talk about this and more, let's bring in Bloomberg's Mark Cranfield. Maybe let's just start with the market pricing for what the Fed are going to do the rest of this year. We're just listening to some commentary from Susan Collins saying that she wouldn't be averse to the idea of 2 rate cuts. And of course, the median dot that came out of the Fed last week was 1. So interesting to see that there's conversations going on within the Fed. But what would 2 rate cuts actually mean for risky assets if they go along with that?
Well, traders are bound to extrapolate, and if the Fed is saying 2, they'll go for 3 at least. So we saw it at the beginning of the year when the Federal Reserve were forecasting 3 interest rate cuts this year. We saw the market pricing in way more than that, and it was very good for the equity market and the bond market at the start of the year. And we saw a lot of a dialing back as people realized the inflation numbers were not supportive of so many rate cuts, and we saw the Fed speaking more hawkishly as well. Now we're starting to go back the other way. The data that we've seen this week and recently is a bit softer. The inflation numbers are a little bit coming down again. So once again, the market has decided for itself that the Fed dot plots really might be incorrect, and that even though they're saying 1, that maybe there should be 2 or even 3 later in the year as well. So that's where the market will continuously push ahead of whatever the Fed is suggesting if the data they see suggests that there can be more lowering of interest rates. That's going to continue to be good for equities. The bond market, of course, will like it. The inversion in the curve will probably stay for longer because the Fed is not suggesting that they're ready. So that means that people will have to defer their purchases to the longest end of the curve, the 10 years and the 30 years. We saw a very hot 20-year auction last night. Even though the yields are already relatively low, people couldn't get enough of those bonds. So you can see the dilemma here where the market will keep on going further than what the Fed is suggesting, and at some point it gets overdone. But there's probably a way to go yet. As we saw at the beginning of the year, markets can really get ahead of themselves a long way before the Fed actually pushes back hard.
Yeah, well, speaking of markets getting ahead of themselves, let's talk about Nvidia. What a run as of late. The stock up more than 150% over the course of this year. The question is, will this rally have legs? It is now the biggest company in the world. Can the rally continue?
What it's creating is a massive event risk for financial markets. And you have to be, no matter what asset class you're looking at, you have to look at Nvidia as being another major event, as if it was US CPI, if it was a Fed meeting, or if it was a jobs report. So now everybody will need to know when Nvidia have their quarterly earnings. So every time they have an earnings event, the whole world will need to watch it, because really that's what's happening. If you look at the speed with which the valuation of Nvidia went from 1 trillion to 2 trillion and then from 2 to 3 trillion, it's really quite remarkable. That means there's an enormous amount of investment capital tied up in just one company. And we've seen the consequences for the NASDAQ and for the S&P. Markets are very frothy on the back of that. It could go on for quite a while. But what it does mean is that Nvidia has to deliver. The expectations are extremely high. So when it comes to their next earnings numbers, they have to either beat them, or the outlook has to be very, very favorable. Otherwise, investors will say, well, that's not good enough, and you'll see quite a significant reversal. And if we do see a correction in that one stock, it is big enough to bring down the market across the equity market, and probably a fallout in other markets as well, probably in the FX space and even in bonds to some extent as well. So what we've done, we've introduced huge risk around a single name company. It won't go away for some time. And now everyone is checking their calendar to see when the next numbers come out.
Yeah. And as you say, the goalposts keep moving higher and higher. That was Bloomberg MLive strategist Mark Cranfield. Thank you. Well, hugging on arrival, Vladimir Putin has received a warm welcome from Kim Jong-Un as he touched down in Pyongyang. It is the first time the Russian president has visited North Korea in 24 years. The U.S. warns the meeting could boost defense ties between the two nations. Let's get more from Bloomberg's East Asia government editor, John Herskovits in Tokyo. John, pretty significant that Putin is in North Korea. What are the two leaders hoping to achieve at this point?
Well, I think that they both have their aims in this. And for Putin, he's looking at getting more weapons and support from North Korea. North Korea has a lot of munitions that are interoperable with the systems that Russia has deployed to the front lines, artillery. And North Korea is also suspected of supplying dozens, perhaps scores of ballistic missiles to Russia. In return for this, Kim Jong-un is trying to get aid, and his economy is relatively small. It's was estimated by South Korea's central bank at about $24.5 billion a couple of years ago. So $1 billion in aid is about 4% of GDP. North Korea needs a lot. It needs food, it needs commodities, it needs technology. And the worry is any sort of military transfer, any sort of technology for arms that could increase his ability to deliver a nuclear strike, make his arsenal even stronger, and this would be a threat to the U.S. and its main allies in Asia, Japan and South Korea.
So given what you just said, you've got to think that the U.S. are watching what comes out of this trip very closely. What have we heard so far from the White House about Putin's visit?
Well, we've seen some comments, concerns that of what may come out of this. Some talk that this is a show of desperation from Putin for weapons. But the more that North Korea supplies to Russia, the more that Ukraine is dependent on outside sources for weapons. For example, if Russia fires off North Korea ballistic missiles, whether they're good or not, it requires Ukraine to deploy its air defense systems, its missile interceptors, which come from the likes of the U.S. The more that are fired to it, the more interceptors are there that are fired off, and the stocks become lower, which puts Ukraine cities at risk for more missile strikes. And also, Ukraine has had trouble procuring artillery. North Korea has been supplying quite a bit. We spoke to South Korea's defense minister last week, who said that it could be up to 4.8 million artillery shells that have been supplied by North Korea to Russia. The EU, for comparison, is struggling to meet its pledge of 1 million shells within a year. So there's quite a difference in what has been shipped between the two.
Appears to be the case. John, thank you so much for the overview. John Herskovits, Bloomberg's East Asia government editor. Well, a look at some of the main events going on today. In a short while, we're going to be getting the UK CPI figure. That is going to be a key number as we head into that Bank of England meeting on Thursday. But of course, remember at the last CPI print, the numbers did surprise to the upside, namely led by services inflation. So keep an eye on what comes out with that services inflation number. If it is very large or an upside surprise, then that will have a bearings on interest rate policy going forward. So the market right now is leaning towards a 50% chance of a cut in August, about 12 basis points priced in. Then at 9:30 a.m. UK time, we are going to be getting some commentary from the ECB Centeno. Mario Centeno will be speaking. So there, watch out for any comments vis-a-vis some of the volatility we've seen in European assets as of late, in addition to monetary policy. And then just a quick reminder that the U.S. are actually going to be closed today for Juneteenth. So many of those U.S. markets are actually going to be closed for trading, despite the fact that we had such a strong session yesterday. And of course, as ever, you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go on your terminal. That is DAYB Go. And also coming up, Boeing CEO is blasted by U.S. senators who accuse the company of putting profit ahead of safety. We'll bring you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, South Africa's stock benchmark, the rand, and government bonds have rallied following the re-election of President Cyril Ramaphosa. He is due to be inaugurated in the next few hours after the ANC agreed on a government alliance with other parties, including their biggest rival, the Democratic Alliance. Now, let's get more from Bloomberg's Jennifer Zabazaja in Johannesburg, who is following the election very closely, and also what came out of the election, many discussions taking place with the ANC and other parties. We now know what this government is going to look like. Just give us a little bit more details on what to expect.
Right, Joumanna, as you mentioned, of course, we have the inauguration kicking off in just a few hours. There are a number of heads of state from the Southern African region and also from the continent more broadly. But the focus will, yes, be on what we hear from the president now that he will officially be inaugurated. But also, we're going to be paying close attention to what his cabinet looks like after he is officially inaugurated. And really, the reason why we are focused on this is because, as you mentioned, of course, the ANC did lose their majority. So now they are going to have to share some of these top positions with some of their former rivals, I guess, current rivals, depending on how you look at it. And so the question will be which positions, which cabinet positions, which ministerial positions are they likely to give up? And how will that then affect the trajectory of economic and fiscal policy? And so that is really what investors are paying close attention to. But largely what we are hearing from the investment community is that this outcome is broadly favorable. But the question is, what will the government look like really moving forward?
Yeah, I mean, there were a lot of questions in South African assets into and out of the elections when it wasn't clear initially what this government was going to look like and whether ANC were going to partner up with market-friendly political parties. Now that that has happened, what are we seeing? What has been the reaction out of the investment community?
Well, since Friday, since the president was reelected on Friday, we're largely seeing investor sentiment really changing. As you mentioned, Joumanna, heading into the election, we were seeing foreign outflows really increasing for days and days on end. We were seeing the rand weakening. Right now, you mentioned the Johannesburg Stock Exchange was one of the best performers in terms of emerging market benchmark indexes on Tuesday among the 90 or so that are tracked by Bloomberg. We're also seeing the rand strengthening more than 3% so far this month. And as you mentioned, of course, we see government bonds, local currency bonds doing quite well. But investors really, as I mentioned, are paying close attention to what is going to happen with this new government that is formed, how they're going to be accelerating some of the reforms that have been hobbling the economy. Namely, of course, there's the energy sector, there's the logistics sector. And so depending on what the president then puts together, I think we're going to continue to see more reaction as far as South African assets. But yes, they're doing quite well, especially if you compare it to what we've been seeing over the past few months leading into the election.
Yeah, some of that election uncertainty now removed. Bloomberg's Jennifer Zabazaja. Well, also coming up, Bloomberg has learned that France and Italy will both face a reprimand from the EU over their excessive deficits. More details on that story ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Boeing CEO Dave Calhoun has faced searing criticism in a Senate hearing that zeroed in on the company's manufacturing shortcomings and accused its leader of putting profit ahead of safety.
You and your board of directors have a duty to your shareholders, but they will be deeply ill-served if you fail to correct course to confront the root cause of this broken safety culture.
Strong words there. Let's speak to Bloomberg's Benedict Kamel, who leads our global aviation coverage. Benedict, good to have you with us. Very interesting to see what went down in that hearing. And of course, Dave Calhoun was very much criticized over the company's safety policies. But is there anything new we learned from it? Were there any new revelations that came out from the hearing?
There weren't any real new revelations, and it wasn't really the kind of forum where you would expect this. This is a lot about sort of the performance, one side sort of trading off against the other. And obviously, Calhoun was very much at the receiving end of the criticism here. He got some real roasters. We just heard from Senator Blumenthal here, who led the session, and he started by saying you've not done your shareholders any service, you've not done your employees any service, and a lot of it was sort of relitigating the last couple of years, what went down. You're seeing in the footage here that Calhoun at one point early on got up and faced the families of victims of the two crashes that involved Boeing aircraft. That was a bit of a moment. He sort of tried to set the tone that way by, showing contrition, showing that he was remorseful. But it was a very difficult session for him. He stumbled here and there. He didn't fall. But overall, he really was at the receiving end of some very strong words.
Yeah, I mean, we know that Dave Calhoun is actually looking to step down by the end of this year. But with that in mind, how did he do? Were there any knockout blows from senators?
Probably the most sort of the harshest point came when one senator started questioning him about his pay. Calhoun obviously is very well paid. He made $33 million in 2023. And that was a section of the hearing where it really went back and forth. What have you done to deserve this kind of money? How does that compare to the humble worker on the shop floor? And at one point, this senator said, it's a travesty that you are still in the job. So really sort of pulling no punches on that front. Calhoun sort of let it, I wouldn't say wash over, but he sort of endured it. He sort of fired back here and there, but overall retained a fairly measured tone. It was a 2-hour session, as you said. We didn't learn anything dramatically new, but it gave us sort of a sense of where the company stands and where it needs to go next. And that was a big point in the whole conversation, sort of what does the company need to do next? Where did it come from? And who's going to be that person who takes the company into the next stage? Nothing new on that front. He did say, I'm leaving. But that's really for all of us sort of the next big marker. Who will take over the company? Who will take over from Calhoun? And who will stabilize Boeing?
Yeah, that is the big question in aviation. Bloomberg's Benedict Kamel, thank you so much for the overview. Now to some other stories making news this morning. Swiss banks, including UBS, are pressing the government to postpone global capital rules for their trading businesses to avoid being disadvantaged after the EU decided on a delay. Switzerland is set to rule by the end of July on whether to also push back on its implementation date. And Bloomberg understands UBS believes that without a pause, it would be one of the few major global banks forced to adopt the trading rules in 2025. And coming up as well, the UK's second richest person says Britons have, quote, had enough of the ruling Conservatives. We will bring you our interview with Jim Ratcliffe. That is coming up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Joumanna Bercetche, and these are the stories that set your agenda. Nvidia becomes the world's most valuable company as tech drives a global rally in stocks. Fed officials again urge patience on rate cuts. In the UK, eyes turn to CPI data due out in an hour's time, in half an hour now, with the Bank of England's 2% target in sight. Plus, the UK's second richest person, Jim Ratcliffe, tells Bloomberg Britain has had enough of Prime Minister Rishi Sunak and his ruling Conservatives. More from our exclusive interview at this hour. Well, welcome back to the show, everybody. A quick market check for you because the S&P once again reached a record high in yesterday's session, getting very close to 5,500, the 31st record high for the year. NASDAQ also yet another positive close. Nvidia very much in focus as it continues to climb up and has now technically become the most valuable company in the world, largest market cap. So that is the view of U.S. equities. Over in Europe, you can see that European futures not doing a lot. FTSE 100 in the UK tilting towards the downside. But of course, two major events this week. We have the UK CPI numbers coming out shortly. And then we also have that Bank of England meeting to watch out for on Thursday. So will be a couple of drivers. This as we talk about broader European asset stabilization after the volatility of last week. And then also turning to some of the other assets that we're watching out for that have been on our radar. The dollar in focus, as you can see today, trading sideways, but inching towards the highs of 2024. So we continue to see dollar benefiting from being the safe haven currency. The pound also trading sideways. We've been in a very tight range for the most of this year, 127, 128. Does the CPI print move the needle? We'll find out shortly. And then gold also trading sideways today, but again, seeing some life come back into the bullion. It is up 13% over the course of this year. And then Brent also one to watch. You can see the oil complex also rebounding away from the lows we got to post that OPEC Plus meeting from a couple of weeks ago. So $85 is where we are at for Brent. But let's turn to that inflation print that's coming out in about half an hour's time in the UK. It is coming out soon, and the CPI reading will be coming a day before the Bank of England decides whether to hold rates steady ahead of next month's general election. So let's speak to Bloomberg Economics' Anna Andrade. And the big surprise for anyone who's been watching UK data has been that services inflation number. It surprised at the upside at the last print. To what extent are investors watching out for that services inflation figure at this upcoming print?
Hi, good morning. You're exactly right. I think that's the most important bit of today's data. So it's really interesting. It's going to be a really interesting data print because since the beginning of the year, we had sort of inflation behaving, both headline and services, sort of approaching 2%, being on a downward trend. And then April was a bit of a shocker. I mean, we did get headline inflation close to 2% at 2.3, but services inflation came 0.4 percentage points above what the Bank of England was forecasting. I mean, April is sort of a particular month because there's a lot of indexation, a lot of updating in prices, and we also had the increase in the national minimum wage. But what the details did suggest is that firms are still feel comfortable in passing along higher costs, and that's not what the Bank of England wants to see. So in a way, in this print, that's sort of what we'll be looking at. On headline inflation, we expect it to make further progress to 2%, actually reach the 2% targets in May. And then in services, we're expecting a decline to 5.5 from 5.9. And I think if we see that, I think then, things will be broadly on track and the BOE will be happy.
Yeah, I mean, of course, many people who aren't as into the weeds as we are will jump on the fact that the headline print is close to 2%. But the Bank of England, and this is what really matters for the future path of monetary policy, will be looking at that services inflation number. There is a meeting coming up tomorrow. There's only about 2 basis points of cuts priced in, so no one's expecting them to move tomorrow. But how will this number affect what they do later on in the year?
Yeah, so I think if it comes broadly in line, and even if it comes a little bit above, maybe, I think the summer rate cuts, let's say that we now see in August, because June is sort of a no-go, because the Bank of England doesn't want to see perceived as sort of meddling in the inflation in the middle of the election campaign. But they have been signaled that they're ready to cut. They have been signaled that a summer rate cut is likely. We think that's probably going to still go ahead, even with a marginal upside surprise in August, because the Bank of England has seen enough evidence of things going in the right direction. Headline inflation, for instance, as you said, the economy has weakened, the labor market is cooling. So sort of there's enough to justify a rate cut. I think any big surprise in today's data, what it will make, what can trigger a reassessment is on the scale of easing. The Bank of England said in May that it was comfortable with 75 basis points of easing this year. I think if it comes a bit above it might recess its thinking and eye into less cuts than that.
Yeah, I mean, they're certainly running out of time on the calendar. Anna Andrade from Bloomberg Economics, thank you for the overview. Well, staying in the UK, the opposition Labour Party plans to charge VAT on private school fees for the first time ever if elected next month. Labour says it will raise £1.5 billion a year, which will be spent in state schools. But some private schools are warning bursaries for low-income pupils could be put at risk. Joining us now with more on this story is Bloomberg's Tiwa Adebayo. And Tiwa, what has the reaction been to these proposals?
Well, it's definitely one of Labour's more polarising policies, shall we say. There's been quite an emotive reaction here in the UK, and I think part of the reason for that is that there's a lot of historic significance associated with these schools, and historically they have been left alone by the government. I think the last legislation with regards to the management of the independent schools was in the 1800s. So this has been well over 100 years now that these schools have been independent in both name and nature. But speaking to some of the head teachers at these schools, there is a lot of anxiety actually in the sector. They're worried that they won't be able to sustain the cost. Actually, I spoke to the CEO of the Independent Schools Council, which is a group that represents about 1,400 of these schools. And she said to me that some schools may have to close. They're not sure whether the sector can absorb this sudden shock of a VAT added cost. So there is a lot of anxiety in the sector, and schools are very worried at the moment.
Yeah, I mean, you've got to wonder politically why they're introducing this. I mean, you can understand from a funding standpoint, but it seems like these bursary programs are going to be at risk. Why are they at risk?
So I've spoken to a number of head teachers, and they are at the moment looking into ways to sort of absorb that cost so that they don't have to pass on the full 20% increase to parents. Now, they've been looking at a number of different strategies, but something that kept coming up in these conversations are these bursary programs. Now, in the UK, according to the Independent Schools Council, about 1/3 of all students at private schools are on some sort of fee assistance. So that's 560,000 students, and they're receiving on average about £13,000 a year. That's 3/4 of the cost of an average private school education for the year. So it's not a small amount of money they're receiving. And the fear is that schools will have no choice but to cut these programs, which at the moment are funded by the school's own revenue alongside some donations from alumni. The feeling is that that might have to be cut or at least drastically reduced, and that will result potentially in some students not being able to afford to stay on in these schools and to continue their education. So that's the feeling among the independent sector at the moment, and they're quite worried that that might be the case.
Yeah, definitely would be a very negative unintended consequence there. Bloomberg's Tiwa Adebayo, thank you very much. Now, the UK's second richest person says Britons have, quote, had enough with the governing Conservatives after 14 years in office. Jim Ratcliffe spoke exclusively with Bloomberg's Francine Lacroix ahead of next month's general election.
I wasn't a fan of the non-dom change. I thought that was very foolish, I have to say. But that wasn't Labour, that was Conservative that came up with that smart idea. 60,000. I mean, you've got 60,000 very wealthy people in London. Why do you want to encourage them to leave? That doesn't make any sense to me, really. Because they all bring, enormous value to that economy in the south of. I mean, most of the non-doms are in London, in the south of England. But I think that regeneration of southern Manchester would attract quite a lot of investment.
What's your take on the UK right now, ahead of the elections, on the UK? Is it good for business? I mean, you're here, you're here in London.
I think that, the Conservatives now have had, they've had a fairly long stint, and they've put forward a whole series of prime ministers that haven't been terribly successful, really, to be honest, the last 4 or so. So, I think the UK, everybody in the UK now, you can see that the mood in the UK, everybody's ready for a change. They've had enough. So it's, I think I've met Keir Starmer a couple of times. I like Keir. I think he'll do a very sensible job.
You've been disappointed with the way Brexit has been run? Is that a fair qualification?
Yeah, it is actually. I agree. Yeah.
So how would you how would you do it differently? And
No,
how do you think Labour will deal with it? Would you be? Would you ever go into politics?
No, I don't think they'd have me, actually. I'm probably not, I'm not PC enough, I don't think, for politics. And I'm certainly not very woke. But no, I mean...
How would you run the country?
I think... how would you run the country? I think, for me, you've got immigration, which is one issue, and the other issue is the economic issue. If you just look at the economic issue for the UK, it's really, in my view, it's quite simple. Is the UK economy is £2 trillion. The GDP is £2 trillion. And the government take half of it, at least half of it. So the government spend is £1 trillion. Right? So, in my view, they're major. And if you look at INEOS, we spend 60 or 70 billion a year, something like that. The government spends 1 trillion. That's an awful lot more than us. So you need to spend the money well, because you're not spending your own money, you're spending the population of the UK's money. And there are good reasons why people pay taxes. You've got, healthcare, you've got police, you've got roads, all those types of things. And I don't think the government manages those things very well. And I don't think it focuses on them very well. And I don't think it's got the right quality people running them. But they're spending £1 trillion. The health service is a mess. We don't have security anymore. Education's a bit of a mess. We can't run sewage systems in the UK. I mean, we had sewage systems running in the Victorian era, and we allow all the utilities. I mean, just take that as a simple example. We allow all the water utilities to be sold off. They were mainly bought by French companies. Then the French companies pay £50 billion in dividends, but don't reinvest in the equipment to ensure that we've got top-class equipment to manage our, sewage and drinking water facilities. And then all of a sudden it's a crisis. I mean, why doesn't the government say, if you want to buy a water utility, then these are the minimum requirements you need to, and if the people don't behave, then do what they do in America, they lock them up. There's some consequence if you misbehave.
That was INEOS founder and chairman Jim Ratcliffe speaking exclusively with Bloomberg's Francine Lacroix for Leaders with Lacroix. Now, Bloomberg has learned that France and Italy will be amongst the 7 countries facing an EU infringement procedure for their excessive deficits last year. So let's speak to Eleanor Mavredi from Bloomberg Economics in Paris. Good to have you with us. Well, there's a lot going on in Paris and in French assets over the last week. We've been monitoring the price action very closely. And it's interesting to see that, simultaneously what's going to happen is the European Commission are shedding light on the fact that France's deficit has been wide and will continue to overshoot that 3% line that the European Commission are watching out for. To what extent is the market right to be worried about the state of France's public finances moving ahead?
Well, clearly the market have reasons to be worried. Even before the announcement of the elections, the fiscal situation of France has been strained. And now the elections only add severe risks to this. We think that whoever wins will likely lead to fiscal slippage, and that's why markets are worried. And the question now is by how much? So in order to answer this question, we look at the programs of the main opposition parties, and here is what we find. So for the case of the right-wing National Rally, we see that the cost of the program could be as low as 8 billion if they stick to the explicitly stated policies, which means that the impact on debt will be manageable, but it will be moderate. But what markets are mostly worried about is the case that the National Rally would stick to policies that are more ambitious, like the reversal of the pension reform. In the case of the left-wing alliance, the new front, Popular Front, our preliminary estimates of the program suggest that they could add up to 60 billion to the deficit. And in that case, the impact on debt will be more substantial and could rise to 121% of GDP in 2027, above 113% in our baseline scenario, and the deficit widen. So in both cases, we see that the EU fiscal rules will not be met. and making the conversations with Brussels more difficult. And even in the case that Macron and his allies manage to stay in power, we see that will also decrease the ambition of their fiscal policies.
Yeah, and it's going to make the path of adjustment even more challenging for France, whatever the future government looks like after the elections. We have also been keeping a close eye on the spread, so that's the difference between where 10-year bonds are trading versus their German equivalents, and we saw a massive uptick in those spreads over the course of last week, almost at 80 basis points. Is that going to have broader ramifications looking ahead on debt servicing or on other parts of the economy as well?
Yeah, clearly. So spreads have spiked since the announcement of the elections and reached levels last seen in 2017, with the first time when Macron and Le Pen were competing for power. So higher borrowing costs could be a strain both on the fiscal outlook but also on the economic growth. So on the fiscal outlook, if spreads were to remain at the current levels or not widen further, then the impacts could be modest. But what more material impacts could kick in if markets react similarly as to the case, for example, of the Liz Truss mini budget, in which case spreads increase by 100 basis points compared to what markets currently price in. And plugging in into this assumption into our model, we see that debt could increase by 100 to reach almost 147% in 2040, way up from our baseline projection of 135%. So it's a story that takes time because debt takes time to kick in. But it can also, in the same scenario, could also have a material impact on growth, which we see can flatten in 2025.
Yep. Eleanor, thank you so much for joining us and giving us the overview of what to expect with French finances. Eleanor Mavredi from Bloomberg Economics. And plenty more coming up. We'll be back in a moment. This is Bloomberg. Well, the White House has reportedly cancelled a high-level meeting with Israel in response to Prime Minister Benjamin Netanyahu's claims that the U.S. is withholding weapons.
I said it's inconceivable that in the past few months, the administration has been withholding weapons and ammunition to Israel. During World War II, Churchill told the United States, "Give us the tools, we'll do the job." And I say, give us the tools and we'll finish the job a lot faster.
Axios reports the Biden team is, quote, angry and shocked by Netanyahu's statement. For more, let's bring in Dana Khresh, our Dubai bureau chief. Interesting to see that the U.S. are now saying they don't really know where these allegations from Israel are coming from. What is going on here?
I mean, we saw Prime Minister Netanyahu in this video saying it was inconceivable that the U.S. was withholding ammunitions and arms at a time when Israel is fighting for its life. This came as a surprise. We didn't know that, and apparently the U.S. didn't know either, and saying they later denied the claims, said we don't know what the Prime Minister is talking about, and the only weapons shipment under review was that one with that includes the 2,000-pound bombs, and that the U.S. is concerned it would be used in Rafah and it would cause massive casualties. So there's criticism here between the U.S. and Israel, and that's been going on since the war. Now it's in its eighth month. Now the U.S. has repeatedly criticized Israel, asking it for more restraint, more aid, and has taken into its own hands anything that it could, including building that pier.
Yeah, Dana, very quickly, I want to talk about Lebanon. How closely should we be watching what's happening on the border right now?
Very closely. The visit by the U.S. envoy meant that there is significant concern about an all-out war. Now, the diplomatic effort may have failed to come to a diplomatic solution in this, but they have so far been successful in keeping the status quo, meaning rules of engagement between the two.
Yeah, let's see if that continues. Dana Khresh, our Dubai bureau chief, thank you for joining me around the set. And plenty more coming up on Daybreak Europe. This is Bloomberg.
We have to let the data tell us, and it's not one or two indicators. It's looking more holistically at the information.
Are you looking at one or two rate cuts at this point, given where things are?
I could imagine scenarios that would be consistent with both.
I will need to observe a period of favorable inflation, moderating demand, and expanding supply before becoming confident that a reduction in the target range for the federal funds rate is appropriate. These conditions could take months and more likely quarters to play out.
It was an excellent inflation number after a few months of less excellent numbers. So hopefully we'll see more like that. I think there is still a little bit of the juice left that's working its way through.
I believe economic conditions are indeed moving in the right direction. If the economy evolves,
The Fed official speaking about the path of rates ahead, and worth remembering that there are now about 46 basis points priced in by the end of this year. I also want to draw your attention to some numbers that we had out of the U.S. yesterday. Retail sales surprising to the downside, coming in at 0.1% versus 0.3% expectations. And then also control group number, that is the core group of sales, total receipts of retail and food stores, excluding certain sectors, that also has been lagging. But then the data was also revised lower as well. So does it tell you that there are signs that consumer spending has started to slow down? The health of the U.S. consumer is going to be in focus in the latter half of this year. And then coming up in just a couple of minutes' time, we have a big number in the UK. Anyone who's been watching what the Bank of England are going to do tomorrow closely will also be following for this UK CPI print. We spoke about this earlier on the show, but UK services CPI has been surprising to the upside. And that's one of the reasons why investors have been paring back their expectations of what the Bank of England are going to do. Only 2 basis points worth of cuts priced in to this meeting tomorrow, but about 16 basis points priced in at the next meeting. So big one coming up. But we're going to continue talking to entrepreneurs and businesses in our coverage of the UK. In the next hour, we're joined by British Chambers of Commerce President Martha Lane Fox. And also in Markets Today, an interview with UK Work and Pension Secretary Mel Stride. That is at 8:45 a.m. London time. Plus, Paul Ryan, the former US House Speaker, joins Francine Lacroix on The Pulse. That exclusive interview at 9:40 a.m. in London. Up next, Markets Today. This is Bloomberg.